All right, good morning, agents. This is Kevin Lauren. I'm the Director of Training and Marketing here at Alta Realty Group. And today we're going to go through some daily habits that will increase transactions. So if you're consistent and you do things on a regular basis, especially daily with respect to outbound marketing, those lead to transactions. So we're going to go through a few really good ones that you guys can do starting today that will help you increase those transactions. So before we get into today's presentation, I'm going to bring Bill Seitz, corporate broker for Alta Realty Group, on the line. Bill, good morning. How are you today?
Good morning, Kevin. Good morning, everybody.
Yeah, it's good to have everybody. We have quite a few new agents on the webinar this morning. So I do want to welcome a few of you. Michelle LeBron, I believe, is joining today. So Michelle, great to have you. And we've got Elizabeth Witt. We have all of our regulars like Ann Harris and uh, everybody else that we see on our webinars every single week. So welcome to all.
Yeah, thanks for everyone for joining because it's an important part of our platform at Alta Realty Group. As we know, we don't all huddle in an office every week, so it's important to get together here for a half hour, 45 minutes every week to know what's going on with the company and know what's going on in the world of real estate, right?
For sure, Bill.
It changes every day, every week, and every month of every year. So,
Lucky us.
yeah, and I got to keep my pulse on it as well. So, couple things before we get Amelia to do her mortgage update. We had an issue last week with one of our transactions with one of our agents, and I want to just point out this because it's such an easy pitfall to fall into. And I think for the most part, as a brokerage, we've done a really good job, starting the training and the education of the buyer broker representation agreement. We started that, I think, last July. And then we had multiple trainings through the fall. And I think that was our very first webinar of the new year, was to keep, reminding everybody the new process and how it works. And so last week, I want to, if you could scroll down, Kevin, to
Sure.
the first page of the BRBC.
Okay. Right here.
Yep. Is there a way to zoom it in or no?
Let's see. I think so.
So this happened with one of our, it was actually our listing. Okay. And this agent, and I felt bad for him because it was a mistake, but he had checked. If you look under let me see here. I'm scrolling. Okay, right, you got there. So under B1, it says property type. And if you look at if you go through this really quickly and you're like filling out the form and you're like, trying to, get it done quickly, it'd be really easy to check one of these boxes. And what this gentleman had done, he did two things wrong. One, he checked single family resident, the first box is excluded from this agreement, meaning that if he were to help his buyer find a single family residence, that would not be included in the terms of this agreement.
Yikes.
So, well, this contract was with a single family residential property. So that was number one where he screwed himself. Number two, he had, under the amount of compensation, he had a 0.5% there. And as I've always mentioned to you guys over these trainings, if it's me, I'm going to put 2.5%, 3% every time. And I'm going to, explain to my client that, look, we put the best offer forward. I'm going to do my best to negotiate the compensation to come from the selling side. If that's not possible, I'll revisit this conversation with you, and we'll, hopefully come up with a solution that works for everybody. So that, just side note there. But what he had done, he had put a 0.5% there, and the seller had signed a 2.5%. Agreed to pay 2.5% to the compensation of him as a concession. So he was thinking he was getting 3%, 0.5% from the buyer, 2.5% from the seller. Well, this is the document that supersedes anything. This is the agreement between the buyer and the buyer's agent. So it doesn't matter where the money comes from. If it comes from all from the buyer, all from the seller, what is put here is what you're going to get. So mistake number two, he had a 0.5% in here, but the seller had agreed to pay him 2.5%. But that becomes basically null and void because of the mistake here. So two mistakes. One, he checked the box that was a single family residential property, excluding that, and it was a single family residence. And number two, he had put a 0.5% there, and so he wasn't entitled to the 2.5% that the seller had signed and agreed to give him. So we basically had to pump the brakes on that. And it because legally, state of California, as we talked about, I think it was Senate Bill 2992, requires this to be in place. And we weren't going to pay, we weren't going to do anything illegal. We were able to get an attorney to draft, an indemnification. And it was a big mess, a big pissing match between me and another broker. And it wasn't that we didn't want to pay this gentleman. It was that he just made some pretty major mistakes. So I just wanted to share that with everybody, because at this form, if you just not familiar with it and you don't really look at it, these boxes and how they're, construed, you can make a mistake very easily. And we know how hard everybody works on their transactions. We don't want to see anybody not get paid, because that would be, that's, and once again, we didn't want the guy not to get paid. I mean, I've felt horrible for the guy, but same time, we're not going to do anything, that's not above board. So we were able to, the attorney drafted like an indemnification letter and got both buyer and seller to sign. And so that was good enough to unwind this. And he actually got lucky in this case, because, somebody may have not been willing to do that. So anyways, that's just one thing. And then lastly, Kevin, the broker tip from yesterday was just, I wanted to share just kind of the way I price homes. Some of you that have been in the business a long time maybe do things a little differently, and that's okay. But I do get questions a lot about how to price a home. And so what works for me over the years, and I've been able to be very, when I don't list a ton of properties anymore, just because I'm, obviously busy doing broker stuff, but I do a few transactions a year just from friends and family. But what I'll do is I'll start with a property profile call, Fidelity. You guys know that's who we really like to use as a company, and hope you guys have started relationships with DJ if you don't have a go-to. But I'll call the customer service number for Fidelity, and they all have them. It doesn't matter, if Tycor, Fidelity, whatever, Old Republic, and I will order the property profile. That property profile will give me all the information, about the transfer of the home, all the particulars, and it'll also give me the most recent sales. And the reason why you want to pull one from title is because not all the sales in the MLS could be there. There could be some that slipped through the cracks that got recorded that aren't going to be on the MLS. So that's like a double, layer of pulling properties and seeing what's been, sold. I'll also just take a quick look at, the Zillow and Redfins. Those are my least weighted things that I take into consideration, but I do look and see what they have to say. And then I will pull all pending, closed and active properties in the geographic area that I'm looking at. And sometimes you're in a community that's very easy. There's model matches, like direct model matches, same square footage, same bedroom count. Maybe it's in a community with 4 plans, and it's pretty easy to get into the ballpark of where you need to be. But some communities are hard, because they're all these properties are different. Either they, and especially more in the high end neighborhoods, because they're unique. There's new construction. There's older homes, across the board. There's views, there's no views. And so, so it's really important to go through all that data. And then also, if you can, I like to just drive the streets and look at what's closed, look at the, look at the exterior, what's the kind of condition it's in. If it's active, I will want to try to get into the property and take a look at it. And, if you get used to doing this process, you'll get very good at how to price a home, and you'll feel very confident when it gets on the market, because we all know the first 2 to 3 weeks are essential to getting the foot traffic, and that's when the traffic's going to be the heaviest. And then the last thing that I'll do is, once I get the home, on the market and get it, get all the pictures done and you make it, whether you got to stage it or not, or whatever you got to do, is that those first, that, I mean, I do it with, if it, until it's sold, but I will call every single agent back after the showing and get their feedback. I will literally call every single one, because I want to see what they're saying. If they're saying the house is priced right, okay, good. Yeah, it's priced right, it's just not for my client. Or if they're saying, well, I think it might be a little bit high for these reasons, then you have really good intel from your associates in the field that have buyers that are looking, in that neighborhood. And that's a really comprehensive, great way to price homes. Granted, that doesn't exclude the variables of, like, the sellers that can be just unrealistic. But the thing is, the more information that you have going into those kinds of conversations, and the more what you're talking about, you can diffuse any seller that's unrealistic, or doesn't, they just think their house is worth X, but you're like, no, this is why. And you can really have that the ammunition to explain to them why it's worth this. So I just wanted to share that, because it is getting a little busier out there. Listings are up, and I do get that question frequently. So if you don't have a plan, or don't really know how to price a home, that's the way I do it. Some of you may have different mechanisms to do it, but it works really well for me. And I, over the years have kind of, developed this one, and it works very well.
No, that's great, Bill. And doing all of those steps and referencing Zillow is really key, because your sellers are looking at Zillow, and they'll always reference that. And so having, knowing exactly what it says on Zillow, and then knowing all your other points, is going to help you, have that highly intelligent conversation with them to correct them if they're off, right?
Yeah, and usually I find that Redfin and Zillow, there's a variance with them. Very rarely are they you know I was just looking at a property the other day. It was around just over $1 million, or right around $1 million, and one had it going up to 1.1. The other one had it in the high nines. So that right there just tells you, okay, well, that's not gonna really work. It gives me a parameter, but you got to dig deeper to get to the real value that is that you can list it at.
No, that's for sure. Well, thanks for that, Bill. We are going to move swiftly over to Amelia Hollow from Clearview Mortgage. Let me bring Amelia on the line. Amelia, good morning. How are you today?
Good morning. I'm good, thank you. So mortgage update today, rates are definitely sitting higher right now. Just, from the perspective of how they've been all year, we're on the higher end at the moment. Again, as I've said week after week lately, the volatility has been pretty crazy. So if you have escrows opening, or you have buyers who are making offers, one thing I'm telling clients right now is that yes, rates are high right now, and a little aggressive, but there's a really solid chance, because I've seen it happen over and over again over the past 2 or 3 months, that the volatility is really swinging in both directions. It's not just sitting high and staying high. We're catching dips, and it's a timing game and it's a gamble, but there's a really good opportunity, or a chance at least, that we may be able to catch a dip in, during the escrow, where we could float the rate in the beginning and plan to really hope and try to get a little bit of a lower rate at some point, before we lock in. So there's definitely higher rates right now, but with higher rates, as we've discussed before, comes opportunity for the people who are willing to swallow the high rate right now, get into the home, and then plan to refinance after they make 5 or 6 payments, versus getting a worse deal on the house, or maybe paying a lot more for the home if they wait rates out, like a lot of people are doing. So I think that's a huge education point that can be made to clients who are maybe on the fence about doing this now while rates are higher, or waiting. And a conversation I've been having with a ton of clients lately has been regarding down payment assistance. So I just thought I'd touch a little bit on some products that we have access to for down payment assistance in case you have any clients who are, just tight on funds to close, really. Because if you're not familiar, the loan, typically the lender is going to require that the minimum investment that the buyer brings in is their down payment. So again, higher interest rate environment could be an opportunity to negotiate a really strong seller credit in order to have the seller cover all or most of the closing costs, but they have to bring in their down payment. Now it can be gift funds, but it doesn't have to come from their bank account. However, that usually is the minimum requirement until you start looking at down payment assistance programs. And one that I've been looking at a lot recently is whether it's 3.5% or 5% down, it is tied to FHA. So this would be an FHA loan. The second mortgage, the 3.5% or the 5% down payment, can come in the form of a forgivable or a repayable mortgage. And so obviously the forgivable one is going to be really cool because specifically with one of our lenders, they go with the Chenoa program. That one, I believe, requires them to occupy the home for 10 years before they have that forgivable element come into play where they can ask the lender to just have that go away. There's no payment the whole time on the second mortgage. It's just sitting there. And then they can, at the 11th year, they can ask for it to be forgiven. However, one of our lenders, Kind Lending, has a really cool program where it's an in-house and they only have to live in the home for 3 years. So if they do plan to move sooner or refinance sooner, it would be due in full. However, if they can, agree to live in there for 3 years, they can then reach out to the lender and ask them to forgive it at that point. The caveat about the program is that it is harder to qualify for. The rate is higher and the requirements are a little tighter because it's riskier since it's forgivable instead of repayable. So I kind of look at both when I have somebody who's looking for down payment assistance, because again, the repayable version, if they can qualify for it and they can handle having a second payment that they're making on the mortgage the entire time, that's going to be a lot easier to qualify for. The rate's going to be a little bit more in line with, I guess it's still higher than FHA because, the lender's getting their money one way or another, right? But it is making it more accessible for people who just simply don't have the funds to close with the down payment. So again, the forgivable version is going to be quite a bit higher on the rate, but as long as they can qualify for it, it's a pretty awesome program just to have in the back of your minds. There's no income limitations for this one, especially because it's harder to qualify for. They do actually have to have pretty solid income depending on the price of the home, of course. And then, on the other side of things, if you did have clients who are first-time home buyers and very much below the area median income for the county, which you can look up on Google, those we can find grants for too. A lot of time those are forgivable. They all vary lender to lender, but grant would be a little different than a down payment assistance, but we have access to all of it. So if you have clients who are a little tight on funds to close, have the conversation with us and let's see if we can find something for them, because we do have a lot at our fingertips with the different lenders that we do business with.
That is fantastic. We do have a couple questions from Alexis. So she asks, when is the best time to lock the rate and what is the credit requirement?
So credit requirements going to vary lender by lender, but these go pretty low because they follow FHA. So they're going with the FHA guidance, which I think might be as low as 580, although it might be 620 or 600. I'd have to double check, but I can find out off the top of my head, but it's pretty low. It's not, a super high credit requirement. And then regarding the lock question, I kind of tell clients, that is like the stock market. Like, when's the best moment to buy? That's all gamble and speculation, unfortunately. So I really try to talk to people about the fact that, if you're comfortable with the payment the way it is right now, let's just get it locked, because it has been so volatile that we could see it swing up. And I wouldn't want to lose this moment. Now, if you want to wait a day and gamble that it comes down, you may get lucky, but it could go in either direction. Tomorrow could be a better or a worse day to buy into the stock market than today was, and it's not really super easy to predict. Certainly, though, probably about a week ahead of closing so that you can get your closing disclosures cooled off, make sure you have time to sign with the notary and have a little bit of a pad on that so that you're not running into any issues that would cause you to have to extend your lock or be late on close of escrow.
That's a
And
perfect
down
answer.
payment assistance for 580. I think they follow FHA. So I don't know. Bill, do you know what the low? I
Yeah,
could look it up right now, but I'm not
it's
looking
right
at it.
there. It's right there, that 580, 600. But like you said, it's going to vary lender to lender.
Yeah,
But these
this
are
one
all,
follows FHA.
yeah. So I mean, this is a great tool for first time home buyers, especially like Amelia said, if people are making good money, they maybe just don't have the money put away, or that, they've got a great job. This is a great conversation to have with Amelia if you have someone like this. And I think obviously Kevin puts Amelia's number into the replay link, and it's there too on our website. So yeah,
We're
all
happy
great
to get
stuff.
on a call and talk about it. Yeah.
Perfect. Yeah, reach out to Amelia directly, Alexis. All right, perfect. Well, thanks. I always appreciate your insights, Amelia, and thank you for coming on the webinar.
Thank you.
So we are going to shift gears now to and I know that was a lot before our feature presentation, but all really important stuff. And so, thank you guys very much for that. So, daily habits. So consistency, as I said at the beginning, is one of the most important things in any business, in any path to success. And so if you develop habits that are consistent and there's stuff that you do all the time, that is going to lead to your success. And there's just one thing I want to point out down here, and it's so important. So the industry average has widely been reported as 50 real estate related conversations that lead to one transaction, right? So, the more conversations you have about real estate and with buyers and sellers, you're going to have more transactions. It's just the way it is. And that's the average 50. So, shoot above the average. You want to have as many real estate conversations as possible. And so the things that we're about to show you are things that will lead to those conversations, right? And then Tony Robbins said the keys to success is to take massive action. And I'll add that the key to true success is consistent action on the right activities. So if you're consistent with the activities that we're about to talk about, true success and consistent success will follow. So this is an important webinar for everybody that's looking for, how you fill your day. What kind of actions do you do that will lead to those transactions? So the first one is, and this is not for everyone, and everything that, the things that we talk about might not fit your style, but for some people, this is going to be a really good thing for you to do. So using direct messaging on social media has become a very common way for, especially for friends to communicate. It's a little bit more personal than a text. It's less intrusive than a phone call, and it does facilitate a conversation where people are spending their time. So all these factors make it a great format for deepening those relationships and helping you stay top of mind with your prospects and with potential referrals. So, these are the things that can put you right there at the top of mind. So what I suggest is do 10 direct messages in the morning, first thing that you do. And you don't want to force these. You just want to send them to people that you really like, or somebody, someone, or direct message someone who posted something that caught your attention. So that's the big one. When you're going through your social media and you see something from somebody in your area that or someone in your farm, and you see something that they post that caught your attention, that is a huge opportunity for you to direct message them and to send them, some kind of a note, right? And you want to be natural. You don't want to send something that's not genuine. So just send something that, acknowledges what they posted. And you can always, a great idea is always, acknowledge something that they posted and then pose a question back to them, right? And that's gonna open up engagement. So I want you guys that, those of you that do use social media, if you're not on social media, you don't do this, this is not for you. But if you're a person that, loves social media, this is a great way for you to, open up some engagement with the people that are following you or that you're following, right? So that's a great way to just kind of open that up. The next one is to post on social media in the morning. So a lot of people, they, when they get up in the morning, before they start their day, they'll post stuff or they'll scroll through their social media in the morning. So if you want to grow your social media following, the consistency again is the key. So daily posts are ideal. And we find that, the algorithms do pick up on that, and they do share your things more when you have consistent posting. So one thing that we've seen on our Alta Realty group social media over the years is, we do post, practically daily, and our social media engagement has grown massively. And, so it's just something that we've seen in our consistency. And so it's something that you guys can definitely do as well. So, a great idea is right after you've done your 10, direct messages, you can go ahead and, post some kind of a thing in the morning, right? So the question becomes, what should you post? That's like the holy grail, right? What do you do? So you don't have to recreate the wheel, as Adam Mosseri, who's the head of Instagram, says. So what we're going to do right now is we're going to go through the things that he sees that, on Instagram that they're favoring, and they'll boost those, and they'll promote them. So the first thing he says is sends or shares. So when you share something that caught your eye, those things they love, because you're promoting something else that somebody else is doing. So the reason that Instagram prioritizes, sends and shares is because their whole platform is about, inspiring creativity that brings people together. So if you, click on a post or a reel, it's, that's something that you do on your own. But if you find enough value or entertainment in something that you share, that's from somebody else, that's a whole different kind of connection. And that's what Instagram wants to, to promote. And so, it's an indicator that this is happening, and, it is something that the algorithm for Instagram picks up on massively. So another way to find posts or reels that will perform well is to study what agents in other markets are posting. Duh, right? Don't recreate the wheel. It's something that we talk about all the time. And so, when you're seeing, things that other agents have posted and they're going viral, just copy them, not verbatim, but, take the same idea and do the same thing, right? So it's a really, really good thing. And so what you can do is to see, how those have been engaged, is you click on the Reels button, and then that allows you to see the number of views each reel has. So super, super key to do this, okay? So Reels, so this is cool. So when you're doing a reel, and reels are basically just videos, the first 3 seconds of a reel are super important. Now, this is mostly referred to as the hook, right? So it doesn't necessarily mean that you need to like bait the user or have some kind of like massive cliffhanger, but you do need to get the user's attention, because as they're scrolling through the feed, you have a brief moment, you have, literally seconds to get them to stop scrolling and to go, oh, what's this, right? And so there's a few, little suggestions that Mosseri, went on to say. So he says that, one suggestion is to have text on your video, because sometimes people they're scrolling through their feeds with the sound off. They might be, laying in bed next to their spouse, or they might be in a waiting room somewhere out where, sound is not conducive. So having some text on that video is a really good idea to help, hook that person, so you can, let them know exactly what this video is going to be about, or what this reel is about. So, based on this information, They have come up with a very good formula. And so the formula is, you know, if you follow this formula, we call it the good formula, right? So it's G, get it right, or get right to it. O, be openly excited. O, offer insight, and D, define who it's for. So if you can, you know, if you can use that formula to create your hook, that's something that Mosseri says will really help you in your social media. So the first one, get right to it. You only have so much time. You don't have to, you know, you can't spend time introducing yourself or thanking them for watching the video. All that stuff's out. Get right to the point. Show up at, and then the next one, be openly excited. Show up as the best version of yourself. Have enthusiasm. People on social media are drawn to that. People in general are drawn to that. So have enthusiasm, show that you're excited, and that will help hook that viewer as well. The next O is offer insight. So share what the video is going to be about immediately. So, you know, a catchy intro says that the video is all about will lead, you know, to longer watch times, right? So if you are engaging them quickly and showing them this video is about this, this, and that, this is what we're going to talk about. That way people go, oh, okay, I'm hooked, right? So this is all about creating that hook. And you literally have seconds to do this. And then the last portion is the D in good, which is define who it's for. So if you're offering insight about the video, one way to create that catchy hook is to let them know who the heck is this for. So an example would be, if you're considering buying a home this spring, this video is for you, right? Super simple. So those are great ways to create that hook in a reel. Reels are very, very important. You can create those reels in either Canva. You can also create them in Zoom. Zoom is a really easy way to do, you know, screen shares and to, you know, show yourself, talking. So those are just really easy ways to do it, right? The next one is share hot sheet highlights. This is a great one. So again, this is something that you can do in Zoom or Canva, or take a Zoom video of yourself talking and splice it into Canva and, you know, create a reel that way. But, you know, every good agent checks the hot sheet every morning, especially if you have, you know, clients that you're actively looking for properties. So, you know, you've got to be checking that hot sheet. You've got to be able to, you know, share those hot properties with your active buyers, right? So, there are basically three groups of agents. So the first group is agents that have active hot buyers, and these are buyers who are ready, willing, able, buy as soon as possible when they find the right home. So these are the priority prospects. You know, you should be emailing these details about the homes that appear on the hot sheet ASAP. Make sure that they know what's coming up. Now, if you're using our, you know, Sierra system or any other kind of system that is attached to the MLS, most of the time or every time they should be getting, you know, a drip campaign that, you know, automates an email that goes out and says, hey, you know, this home just came up. I'll show you an example of that while we're talking about it. So let me bring that up real quick. Oh, I shut it down. So people that are using our Sierra system, they get these, you know, either daily or weekly or monthly updates depending on, you know, where they are in the buying process. But they will, you know, literally get an email that shows them exactly what properties are available, right? And it's kind of going too slow, so we won't go there. But what happens is, let me share my other screen. When you do that, they're going to click on any one of those listings and they're going to be right on your website now. And they're going to be, you know, looking at exactly which properties that pop up, and they'll have every little bit of information on that property, as well as similar listings and other things like that. So it's something that every agent should be doing, and it doesn't really matter where they are in the buying cycle, but especially if they're a hot prospect, they have to be getting these, sorry, I wasn't sharing my screen. So this is an example of the property, website coming from your main website. So what happens is they're just getting these, these properties sent to them, and then they click on them, and then obviously they're going to be on, this nice, very well laid out property website. So let me get back to my graphic here. So that is, that's the first group, right? And so it's great that they're getting that, but you should always follow up with those hot prospects with that kind of Zoom recording of your screen. The same thing I just had my screen open to, and you talking about the property. Hey, these are the features. This just came up. I thought of you. And these quick Zoom recordings, they don't have to be long. Keep them concise. But it really, you stand out when you're sending that via email, and you can even do it via text to your hot prospects. They're going to respect that, and they're going to, find value in that. So the second group of agents are agents that have a large database, but the engagement with the prospects is low. So many of these prospects are receiving the automated property updates, from time to time, but you might not have spoken to them for a while, which is okay. This is the kind of thing that happens, but this is an important, step when you are in that situation and you want to re-engage them, especially with, somebody that, you sold a property to, a couple of years ago, but that you've been sending them these property updates. So a good, text or email to re-engage goes something like this. This is Kevin Lauren with Alta Realty Group. You've been receiving my property emails for a while. I don't want to overwhelm you with emails that you don't want or need, but I do want to make sure I'm sending you the information you want. With that in mind, should I make any adjustments to the types of properties I'm sending, price range, homes, frequency, or areas, right? And so that's just a really good personalized engagement that you're going to do with these older clients, right? And these cold leads, right? And some of those all of a sudden turn into hot leads, right? And then the third group is agents who have very few, if any, buyer prospects. So if that's you, you have to begin to focus on building your database so you have buyer prospects you can send those hot sheets to. And so I just was on a training with an agent last week. He, is just kind of getting back into the business, really doesn't have a database, but he does have the Sierra system, and I showed him how to use the updates, the market updates and the e-alerts. And he said, whoa, this is perfect. This is a great way to re-engage. And so if you're in that position, what you're going to want to do is get everybody in your sphere of influence, anybody that you've sold properties to, even years ago, put them in there, and then follow up with a phone call or a direct message or a text, and just say, hey, just wanted to let you know I've got you, on my e-alerts, and, I hope it provides value. Let me know if there's any way that I can, change the properties that you're getting, or anything that you're focused on, right? And then the next one would be send unsolicited video CMAs. If you could do this once a day, this is a game changer. So especially with clients that you sold a property to in the last couple of years, make sure you're updating them with a unsolicited video CMA. So what is that? So that is just creating a comparative market analysis that you go through with them on a Zoom recording, right? It's not very hard to do, and it provides a ton of value for your clients. You're walking them through it. You're not just sending them a CMA and saying, hey, digest this. You're sending them a CMA, you're going through it, you're making comments about it, and then you follow up with a call to action. Something like, I hope you found this, informative. I would like to go through this with you, over the phone. What time, when can we meet, or when can we set up a phone appointment, right? So that's it. I mean, if you do one unsolicited video CMA a day, you're going to get more transactions. I guarantee it. And then the last one is, this is a time-tested way to stay top of mind with your past clients and people in your sphere of influence. Write a handwritten note on your personal stationery and, send it via mail. I know it's mind-blowing. We can actually still use mail, but yeah, send a handwritten note to, any of your past clients. And the notes can range from, a variety of things. A simple thank you to asking a simple real estate related question, or just letting them know that you're thinking about them, you hope all's well. A lot of times through the course of a transaction, you learn about their family, you can ask about the family, and just something that's genuine, and you don't even need to mention anything about real estate if you don't want to. But it is a great way to stay top of mind. It's a refreshing thing that people will get in the mail. They will read them almost 100% of the time. It's an appreciated gesture that your clients definitely will take notice of. So we're going to end with just going over this one more time. The industry average, it's been widely reported as 50 real estate related conversations lead to one contract. So just take that in. It should be almost like your mantra every day. How many conversations am I going to have today that's going to get me to the 50 mark, that's going to lead me to a contract? So if you do that, stay consistent, you implement one or all of these daily activities, it will lead to transactions. So Bill, any takeaways from today's webinar?
All roads lead back to your database.
Yeah, that's right.
So it's like, and if you just thought about like who's in your phone, like who's in your iPhone or your Android or whatever technology you're using, like if you just went through all of the contacts in your phone and put that into a spreadsheet, and you had the email and the phone number, that right there is a massive pool of buyers and potentially buyers and sellers in real estate. And from there, all these different things that Kevin talks about can be plugged in. And so once again, we kind of repeat ourselves constantly, but you don't have to do all these things well. You just have to do a few of these things well, but it all ties back to your database.
100%. So, we're going to leave you with this. Get out there, be creative in what you do, and consistent in what you do. And those things are going to lead to transactions, right, Bill?
100%. And just implementing a few of these things. I mean, I think everybody would agree, if they could do an extra 2 to 4 deals a year, what that would do for their bottom line, or maybe the vacation they want to take, or maybe whatever it is that you're looking to do with some extra money. I mean, if you kind of break it down that way, it's not so hard to digest and to get it accomplished.
Not at all.
So
Well, yeah, thanks for the insights, Bill. Always appreciate that. That's all we have for you today. So agents, get out there, make it a great week, a productive week, and we will see you all on the webinar next week, where I will go through specifically how to make a unsolicited video CMA. So looking forward to that. So have a great week, guys. We'll see you next Wednesday.